Welcome back to another podcast, and this is going to be the kickoff podcast for 2026. That's right. We're getting to say that word now, 2026. And of course, it's going to be a good one because we'll have, of course, Mickle joining us today, one of our frequent guests on the show, all because of you guys that are, of course, listening and subscribe to the pod. Thanks for all that good stuff. You guys know what to do. Make sure and like and subscribe on this show. Let us know guests that you would like this year. Now, our producers and our editors are out there working very hard to try to make sure we get a good, rounded guest base. We see your comments. We hear you on all of those. We try to get through as many as we can. And of course, we always love that insight. So make sure and continue to do that. Just drop comments down below. You can also DM me over on Twitter, which is just @PaulBarron. All right, let's get into the show today. I want to bring in Connor and known as Mickle out there. You guys know on our show now, what is this number 4 appearance for you or 5?
4 or 5. It's always
you're a regular.
Always happy to come on.
You are a regular now, man. Hey, Connor. You look at what's going on right now with the general market going into 2026. I'm already seeing a lot of analysts saying this is going to be uptime. We're going to see a lot of potential upside on the S&P 500. And then I'm seeing all of this negativity happening here over the last 30 days on all this massive fraud that's coming in. And I wanted to share this tweet with you and just ask your opinion on if you think this is going to have any impact on what could be brewing in the financial markets. This, of course, is the All In podcast. They've probably been one of the most vocal on this. That's Chamath Palihapitiya. He's talking fraud at this scale will end the American empire if nothing is done. And what they're talking about is all of this daycare fraud, Medicare fraud, and it seems to be rampant across multi-states. It's not just Minnesota. It's being discovered everywhere, including California. Do you think this has any impact on the markets for 2026?
Yeah, great question. And, it's one of those things where you always knew it was bad. You knew it wasn't going to be good, but the magnitude of what they're publishing is insane. I mean, I saw one the other day that the 1.5 trillion or the 2.2 trillion collected from income tax, almost 1.5 trillion estimated to have something to do with some fraudulent activity. So we'll see where those numbers end up panning out. Oftentimes, I think I always look at something from a perma bull perspective or from someone who has general optimism on the markets. I got to look at it like this. Look, if we've been running this race this entire time with 2 massive 45-pound plates tied behind our back because the system is so leaky and we're blowing all of this money in places it shouldn't be, what's going to happen if that gets cleaned up? I only see that as a dramatically positive thing, especially if they can actually clean it up. Now, that seems to me like a tough statement to make right now because it doesn't seem like we've ever really gotten real progress on a lot of this stuff. But I do think if we can clean this up and fix it, which it almost seems impossible not to make the situation better, you're only going to help things. You're only going to make the system more efficient. More money is going to be going to where it should. It should create more prosperity. It should make the economy better. What we have is horrendous and terrible, but I can't see it getting worse. Fingers crossed. It would almost seem impossible to make it worse.
Well, I think this is the one issue that I look at right now, and I consider where Trump is in his presidency, and he's, of course, trying to make this a continued, I think he tweeted out, this is, welcome to the golden age this morning. Here we are, the beginning of 2026. I think that if he does not do something about this, this will go down as a president that became a lame duck and ended up being maybe one of the worst presidents we've ever had because he knew about it. All this stuff is being uncovered. We wouldn't have uncovered this in the past administrations. So the fact that it's getting uncovered now, it's almost putting them and this administration in the crosshairs to actually do something about it. So this is going to be a year of the reveal, I think.
Oh, I completely agree. I think they absolutely need to do something about it. I mean, it's one of those things where if you go back to like the campaign promises, I mean, this was a huge part of it. And I'm not under the assumption that this is something that was unknown for this entire time. I mean, I'm sure to a large degree it was known. Even if you look at the Minnesota stuff, suddenly it comes out that there's been investigations for years and this has been raids by the FBI, and those same people are still running the same center. So it seems to me like something, you're right, absolutely needs to be done. And if it is, I only see it, like I said, as a good thing. You had so many incorrect projections on tariffs were going to kill the economy. And we came out with a 4% GDP growth and all this different stuff. And, cleaning up all of this wasteful spending and directing that money to actually impactful places, or just coming to the conclusion that you don't need to take as much of people's money because you're giving it away to fraudsters. Yeah. Those sort of things all are only positive impacts. And it's not like we're taking a really small amount and cleaning it up. I mean, we're looking at more money being wasted than actually being put in the appropriate place. And if that can be solved, which you're right, it absolutely needs to be for credibility to remain in the system, then I see that as only positive.
Well, in the statement that Chamath made, I am in complete agreement, is that this will end the American empire in the idea of what we believe, because you're going to get to a point where people, everyday working people, are literally going to detach away from the system. And this could be a problem, I think, especially in the economic side of things, but more importantly, the social construct that starts to break down. That's the bigger thing. So this is a very tight rope that this administration is walking, for sure.
Look, I would be totally like, I accept that there's going to be fraud in the system. I think if I accepted 1 to 3%, like even that number would come out, and if it was near 5%, it would be high. But talking about 60%, I mean, this is comical. Like it makes you feel, right, that it absolutely needs to be mass facilitated and on purpose to a certain degree. Like, you can't get to 60% number like on accident. It's like, oh my God, you're doing such a blatantly bad job. You're actually destroying the system faster than you're making anything better.
Well, we got into a conversation over the holidays on this, and I had 2 attorneys, I had 2 CPAs, and I had a whole slew of market people at a dinner. And they all came up with the same result, which was, listen, a lot of this fraud's being committed by immigrants who barely can speak English in most cases. So it's not them. They're just simply the useful, I won't say idiot, but the useful mechanism that is coming from inside the system. This is coming from inside the system. That's the problem that I think has to be eradicated. And that means, all sorts of accountants, CPAs, attorneys, all of which either had to have known and just turned the cheek or were part of it. There's just no way. 60%, it's just impossible. It's impossible.
I totally agree. And I guess that's where my natural pessimism comes from. It's rare, in my opinion, that anyone actually, you're right. It's easy to hold some of these low level people accountable and blame it on this and blame it on that. But the people who actually matter, who are facilitating this at the highest level, right? Like, it's like, I even thought the whole report was funny when it was like, the FBI is now investigating it because some kid with a camera went and in fact, like, what is like, should he be running the FBI? Like, what do you mean? Like, it's now investigating this. I mean, like, what do we need? Like him to go like solve all the major crimes among America? It's such a joke to a certain point. And that's the side of it where I am extremely pessimistic on, just because it doesn't seem like even in this new administration that the people who need to be held accountable are being held accountable. Right? And I don't see the problem going away, right? Like, it will be a new trick next year and a new trick in 5 years unless the actual appropriate things are put in place, which I did see some stuff now, believe it or not, they're requiring actual proof of where the money is going before they're spending money. I mean, I don't know a single company that doesn't force that. The fact that the United States government is just hitting the send button and blasting money all over the place is insane. But, when you see something this bad, it's impossible to sum it all up as, they tricked the system. I mean, it's deeply ingrained, unfortunately. And I don't think anyone's going to buy it until the people who are inside start seeing some repercussions, because it's orchestrated to do the next thing.
It's for sure orchestrated. I was out on Twitter. I kind of pointed on this, and I was kind of reminiscing on the same issue with what Chamath was saying. And I'm like, this is a problem. This is probably one of the biggest problems our country's ever faced, because it's out in the open now. And some, typical egg that comes in off of X, which is no face, no name, comes back, well, Paul, the New York Times reported on this before. And I'm like, you just made my point for me. that the media is one of the biggest problems. You have a 20-year-old kid going out there with a GoPro, and all of a sudden he gets, a 500 million views in a matter of, 48 hours. I mean, you just made my point. That's the New York Times doesn't matter anymore.
It's crazy. It is like, and the funniest part is at the same exact time, you see California talking about the wealth tax, right? So it's like, so you're going to then take more money and send more of it to fraudsters. It's like, it's so obvious. The math is so simple where they could get their wealth tax just by stopping committing fraud. They would have all the money they needed. Oh, more. But instead, their solution is we need to go take more money from people. And now you're getting to the point where I think there was already a lack of belief from the American people that these taxes people were paying were used to improve their own quality of life or really improve other people's quality of life to a certain degree. I mean, homelessness has only gone up. Like all these things have only gotten worse. And then not only that, but then when you find out that a lot of these agencies are actually seeming to be openly facilitating these sort of things, it's just a huge gut punch to like everyone who's working really hard and just trying to make an honest living. And then it's just no one cares to actually go out and solve these huge, massive problems that are detracting from everyone's quality of life.
Yeah. This is the concern I have of it affecting the overall markets. We'll get into markets as well today. I want to jump over to, of course, what's going on in the current market, which Bitcoin, of course, is starting to edge toward 90K again as we're recording this morning. The 7-day, though, XRP holding up nicely on a 5% market correction, which has been really good as XRP is nearing $2 again. And if you look at that along with, Connor, what we're seeing right here on Fear and Greed, up to 34. So do you think we're on a little bit of a run here? What's your current position? Are you bullish? What do you say?
It's so funny. I always tell people I'm almost always bullish. I think the only time I was bearish in the last 7 years was when FTX was imploding. I was like, this is probably going to cause some issues in the market. I just think you're so much better off having a long-term bull perspective in markets. And you're totally fine to get short-term bearish depending on a specific asset or a specific company or something like that. I think history tells you you're better off long-term bullish. The big thing that I'm wondering is it seems like every single person that I talk with is waiting for that last capitulation down, that last V bottom, that last spike, that last string to break. And I just wonder if so many people are waiting for that thing to happen. So many people are just forecasting that's going to happen. Everyone's expecting that last buy order to come in, that last big spike. Is if we have something that totally catches everyone off guard and we have this rounded, boring bottom where suddenly we're going back and everyone's still waiting for the spike, then we're close to all-time highs, then people are still calling for that last crash, and then you know how the story goes, then we're setting new all-time highs. I wonder if that's a possibility here. I think the most important thing people need to realize is I couldn't be more excited about what's happening on the XRP and crypto side. I don't think you could have better news, better information, better companies, better adoption. So I think price is only going to track those fundamentals, and why it's been diverged over the course of 2025, I'm not sure, but I think that corrects itself quickly in 2026.
We're looking here at the coin market cap altcoin season index, which is starting to come off of that bottom, which was at 14 back here just a little bit ago, where we saw altcoins holding at about 1.1 trillion. And as you saw, the overall right now just edging above 3 trillion right now as we report on January 2nd. And I think as we see this kind of growth, to your point, is that I think this year, even though I'm still concerned about labor being one of the biggest issues, I'm talking about jobs, slowing this market down. But I just think we're in a position right now where we are going to see a very interesting upcycle. S&P 500, and this gets me a little concerned, is almost every analyst is still picking the S&P 500 in many cases to see an 8,000. That would be unbelievable for 2026 if we continue that. If you consider an 8,000 S&P, a market cap right now on crypto at 3 trillion, gold setting at 32 trillion right now. What do you feel like crypto or digital assets could be end of year? Do you have do you think we could double this market cap end of year?
It's one of those things where I openly admit to this, I didn't expect gold and silver to get as parabolic as they got. And if you see non-volatile assets doing that, just imagine what crypto could do. I think it'd be absolutely explosive. I think a lot of those markets have just been early indicators. Now, the thing that I'm a little confused about that I didn't expect to see was the level of fear that's remained in the crypto market while you've seen a lot of fear exit some of these other asset classes. And that's what I think is a little bit harder to pin down. I'm not sure if there was so much excitement about the clarity bill coming out and then that kind of got pushed off and the market's starting to think, oh, maybe that was more of just like a hype thing and we're not going to get it. But I would imagine that we are going to see very quickly the cryptocurrency market catch up to the rest of these markets. I don't see really any reason it wouldn't. And I think the fundamentals of the cryptocurrency market are outstandingly better than a lot of what we're seeing on the metal side and on the company side. So I just think it's a really good indicator that for whatever reason, the cryptocurrency market's lagging a little bit, but I fully expect it to catch back up.
We are 73% up. I'm looking at the gold chart here, guys, since January of 2025. Up to the last week, outside of the return that we saw in gold where we had what I still believe is going to be some market manipulations, holding at 4,300. But this thing had spiked up to 4,537. So this is a very interesting one to watch. We'll talk about silver in a little bit because it kind of has that same parabolic move that we've also seen in 2026. So maybe to your point is that we do start to see maybe a rotation because I think gold and silver, this was this year. You know, and when I say their year was 2025, do they get it in 2026, those precious metals? I just don't know if that continues to be the one. Let's talk about stablecoins real quick, Mickle, because one of the things that we're looking at right now is this chart. This, of course, is the stablecoin chart. If you look at this in general, trading volume continues to flow. But I want to go over here specifically to RLUSD, which is now accelerated to 1.3 billion. So we start to see what's going on, I should say, where we're going with this, almost flipping USDG, and also starting to rotate into some of the volume that we've seen coming in even as high. If you look at where Ripple is right there at 63, even to where Athena is holding on a volume at 77. What do you think about RLUSD getting a much more adoption this year?
Yeah, I think a huge part of it actually goes to the clarity bill. I think if you take a look at where there's large adoption in stablecoins right now, a lot of it is more on the DeFi side. I think a lot of what stablecoins are being used for right now is in the DeFi market, which is a lot less regulated than other markets and a lot of on-chain volume. But Ripple's always targeted those regulated financial institutions, and I think that's going to be a huge appeal to them. I think if you look at Ripple's kind of offering they're building on custody, on prime, on brokerage side, the stablecoin fits right into it. And I think Ripple's largest customer, Ripple's largest market is really yet to be tapped. Like a lot of people see a lot of these stable coins as like, oh, one winner, like whatever. I think there's going to be multiple winners in this space. And I think the DeFi market stablecoin is a little bit more tapped than that institutional grade corporate sort of stablecoin. And I think that's exactly where Ripple's stepping in. So I think clarity is only going to be a really important thing and a huge adoption driver for RLUSD. As a lot of these financial institutions say, I want the highest quality, most premium reserve I can have on the stablecoin. I think a mix between that and Ripple's integration on custody and a lot of these other institutionally focused products builds an ecosystem out for them that makes it really easy for them to step into something like RLUSD. You can look at the Ripple's national charter for a bank. They're one of the only people to have that. Almost every stablecoin rating agency has RLUSD as the highest rated stablecoin. And I think those things are going to make a huge difference for that next adoption wave to more regulated financial institutions.
Well, and people understand as Ripple and RLUSD, the only chain that holds a stablecoin, gets out there and gets more acclimated into the financial system because of its relationship to what's going on within XRP. I think XRP is a tag-along asset that wins when, of course, RLUSD is going to win. So the opportunity here, I think, for XRP to continue to see market moves is real as well. And if you look at where the stablecoin market cap is, because it's approaching $1 trillion right now, and this was like 170 billion just in 2024. I mean, it was barely even on the map. So we're almost 10x, or will be 10x, possibly in the next couple of years. That could be a big upside for XRP as a whole. Do you think that we are going to see major banks starting to accept, or did you see what Uphold announced this last weekend where they're actually favoring RLUSD over USDC in terms of yields?
No, but that's incredible. I hadn't seen that, but all of those things in conglomerate are only putting more pressure on financial institutions. And I kind of thought, in my opinion, the first major shot across the bow was when Coinbase IPO'd and was instantly larger than some of the longest standing legacy financial institutions out there.
Yeah.
It's one of those things that they are now no longer able to just deflect and say, oh, this is niche, people don't care about it. Like, the market is valuing these cryptocurrency companies at huge premiums in comparison to what the legacy financial institutions demanded. And that's a huge issue for them, because the money that these valuations drive all kinds of things. They can raise more money. They can be more powerful in DC. They can usher out quicker products. They can spend more money on advertising, bringing in more users. And it's becoming one of those things where before it was so easy to push it under the rug and say, oh, we don't do this, you should stay away from this. But now what they're finding is their clients and customers are just getting up and leaving and going somewhere else.
Sure.
I don't think they really have a choice anymore. I think now it's kind of one of those times where rather than being able to get positive PR by saying, oh, like, we don't do this, like, this is bad and all these things, now that's turning into negative PR, and the positive PR is acceptance and saying, we're doing this. You don't have to go somewhere else. We're going to have a better version of it. And I think they have to, or they're going to be left in the dust and they're going to lose their customers.
Yeah. And I think the advantage that RLUSD plays in, and I don't hear a lot of people talking about this right now, and that is the effect it's going to have on enterprise DeFi. We've had many analysts on over the past several weeks that have said point blank that we are going to see a DeFi 2026. Matt Hogan and I have talked about this. Stephen and I have talked about this from Canary. And you look at the potential where DeFi starts to become a bridge engine for institutional to start working on chain. And there's really only a handful of assets, such as RLUSD, that make that a natural effect. And if that happens, I mean, come on, dude, you're talking about huge numbers here.
Yeah, and this is a huge point I've been making forever that I think is probably one that takes a little bit longer for people to see. But a lot of people in the very early days didn't like that when Ripple worked with financial institutions that, say, weren't ready to jump full feet into crypto, right? Maybe they just needed to watch the market, see, build, understand certain things a little bit more. A lot of people didn't like that Ripple would work with those financial institutions on products that didn't necessarily directly use XRP at that given moment. But what Ripple was able to do is get a really good understanding of what these financial institutions needed to see in future DeFi products, in future products involving the cryptocurrency industry. And now they're able to go out and build products specifically for these financial institutions that brings the technology side of crypto in, but making sure that their compliance needs are also met. And I just think while the rest of the cryptocurrency industry kind of went with this mantra of, oh, it doesn't matter what they think, we do things our way, this is how it's going to be done, they'll come adopt it or be left in the dust.
Yep.
Ripple did a really good job of bridging this medium and saying, you can have all these aspects of compliance and still get the attributes of the blockchain you need. And I don't think there is enough of a focus on that by the majority of the cryptocurrency sector. I think they just thought these financial institutions would fold over and come build their stuff on their own. And I just don't think they necessarily have the proper engineering talent to do that on their own. I don't think they have the proper blockchain experts. And I think what they really want to do is they want a partner on the other side that says, hey, if you can handle X, Y, and Z, we'll handle this part of it, and then build a product together that has those things in mind. And I just was always such a big fan of Ripple working with these financial institutions for a long-standing period of time, even if that relationship didn't start with them going all in on crypto day one.
Yeah, this, of course, was Brian Armstrong talking about the stablecoin growth, on-chain adoption this year. And if you look at the couple of the trends that I'm very focused on right now is something I call vertical capital. So don't worry about these random pumps you're going to see. I think we're going to see some mergers and acquisitions. The trend has already been there. We've seen Stripe, PayPal, banks all trying to figure out how to get into crypto. So they're buying mostly infrastructure, which goes back to your point, rather than building from scratch. Then you look at stablecoin velocity. And I think the opportunity for stablecoin velocity resides in RLUSD. I think that's the one that might end up winning. And now, granted, Coinbase will go head to head. I'd like to see a major exchange really go all in, beyond Uphold, others out there that could go all in on RLUSD as the cornerstone of stablecoins, for sure.
Yeah, and I have an interesting question, like how much of if the market is valuing Tether, right? If Tether's market cap, and I don't remember the exact number, at whatever, 130 billion, I think it's close to on some days, whatever it is. How much of that do we actually think is regulated large trillion-dollar finance? I would argue there's probably very small amount of that. So if that's what the unregulated market is kind of looked at right now, what is the regulated market going to look like in terms of a stablecoin? In my opinion, it's probably going to be in the tens of hundreds of trillions when we look back at this 15, 20 years from now. We're going to look back and it is going to be oh, remember we thought that billion number was big? Now we're in the tens to hundreds of trillions on some of these stable coins. That's where I think it goes over the long run, just because the size of some of these things before any real big players have gotten involved are already where they're at. I mean, imagine what's yet to be unlocked, because I think a tiny percentage of what is going to come over has come over thus far. And I make this point every single time I come on your channel. But I don't think the people coming in are going to want the same things that we wanted before in the past in crypto. I think they're going to make different decisions based on different ideas, based off different requirements, and where those decisions are going to lead them. I have always been under the assumption that RLUSD is going to be a huge beneficiary of that, along with XRP.
Well, and you look at it, to your point, I'll bring up the chart here, because this goes along with what you're saying. And that is, when you look at the potential of almost hitting $1 trillion now in overall market cap. But right now, market cap on Tether, 186 bill. You're sitting at USDC sitting at 75. And then you can kind of start to see. I think the one on the move is Ripple, and where RLUSD, because it's accelerated so fast and has come out of nowhere, it has the opportunity, especially at the institutional side, to become something super special. And the other thing too, Mickle, look at this story. This is the Financial Times, all right? And this is the global news. This is like the global Wall Street Journal. People in Europe watch this and read this. People in Asia read this. And they're out there right now. Patrick Tennant is one of the best writers over there. Why Stablecoin Supercycle could rewire banking. So they're talking about a complete rewire of the system. That gets to your point of untapped opportunity here for many of these stablecoins, for sure.
Yeah, and I remember when saying stuff like this was wild speculation, and I remember talking about this sort of thing was maybe in 2030 this could be thought about. I'd say they're not going to adopt stablecoins anytime soon, and you're just seeing such a rapid flip in sort of people's sentiment, in people's ideology, in how important this technology can be. And it used to just be kind of niche groups of people who understood technology, kind of thought it was possible. Now you're looking at extremely reputable people who understand the financial system extremely well, jumping on board and agreeing and saying, look, this is transformational. This is going to fundamentally change the way the banking system works. And it's just so funny how quickly that has changed and flipped in my eyes. And now it's all these things that we used to speculate on and we used to guess on, given that there's still some speculation, but to see confirmation from some of these people who are longstanding critics and some of these people who might have kind of dismissed the possibility of this happening as quickly as it has, I think that adds a tremendous amount of credibility to the thesis that this is something that we're going to see materialize here in the not too distant future.
Are you at all worried about a potential regulation or black swan event? Obviously, we saw
from the regulation side. Not in this administration. I think there could be some, it's one of those things where how the cryptocurrency market was built out, I have less issue with it, because the way the cryptocurrency market was built out in my eyes is most of the regulated financial institutions really didn't get involved in any kind of major way. They were very hands off. If it wasn't the case and they all said, hey, we're getting involved. Say 5 years ago, BlackRock, but all these major financial institutions just made the case hey, we're just going to adopt with what's here. They were heavily loaded up in Tether, and they were running sufficient financial products with Tether. Then could I see a potential black swan in terms of them saying, oh, we don't know if this meets compliance, and then huge rollouts, huge moves of capital? I think that would be possible. I think Tether is still going to be a very viable option for a lot of the use cases it has, especially in some of the less regulated markets. So I don't necessarily see it as like huge black swan, this stuff is going to get killed off. I just think the other stuff is going to rise a lot faster. And whether or not Tether keeps growing at its pace, bleeds out a little bit because people make a transition over or something like that, I think that's yet to be seen. I just don't really, I only see this as a good thing for projects that have leaned into regulation and building that sophistication in mind. I don't have any huge concerns about a potential black swan other than maybe MicroStrategy. And I guess see if Bitcoin determines if they're going to have issues or not.
Those are the ones, well, that's leading number one for me for this year. I've kind of got three areas I'm watching closely, and that would be a strategy implosion, MicroStrategy, because, they're holding, 3% of Bitcoin supply, which is massive leverage in space. And if they face a liquidity crisis, that's going to be a huge issue. That'll be a cascade event, I think, worse than FTX. The other thing that is a bit concerning around stablecoins is the emerging market currency problems. Because if you look at what we could see is maybe dollar peg stablecoins that could literally drain liquidity from a lot of these local currencies in these emerging markets, just suck it right out, which could force their governments to ban crypto rails to save their own fiat. That would be a bit of a concern. But then I would look at, then they're going to be so far behind the rest of the world. Some may not care, but I think a lot would, just for the trade value. And then you look at, potential sovereign debt, which is another problem. And this is obviously U.S. debt interest, which is huge. And could they get into a hard asset narrative, whether it's Bitcoin, whether it's XRP, gold, other kind of capital controls? Those are the things I'm a little bit cautious about for 26.
I would say I have the same cause of caution. I would say my only thing on MicroStrategy is I was pretty convinced that the FTX situation and the Terra Luna thing was that was going to do it, and it didn't. It was a lot more resilient than I thought. I thought that was going to be lights out, and it wasn't. Things have changed since then, but that made me a little bit less concerned. It's still a high level of concern around the entire thing, but I thought that was an interesting test that I was surprised they survived. And I absolutely agree on the local currency thing. I think my only even kind of devil's advocate side would be, I would think that governments could do something interesting in allowing those stable coins to exist with limiting spending. If spending was kept to currencies that were local to that and they had a uniform version of money, especially with tax systems, I think you could still keep the importance of that given currency, even if it was diminishing. I don't think there's enough people out there who would look to obfuscate and go around it to be a massive issue, but I still think it would be I still think it's going to be a large issue, and a lot of governments won't be quick enough to get on the right side of that, and they will have tremendous issues. I would think that there could be something done to mitigate that, but those are two things that are absolutely on my radar as well.
Yeah.
As large things that could potentially cause some sort of black swan.
Well, and I think the Western, financial world is still pretty much the leader. And even if you don't have, emerging markets fully in on this, because they are going to be trying to figure out how do they save fiat in many of their cases, even if you don't have that, at least in the early stages, because it's in some countries who've tried to ban social media, those kind of different things that have been a problem. I think eventually they join the crowd and, you get the digital dollarization era truly here, which I think is just maybe 2 years away from full. I'm looking at this statement right here. Let me show you this story because this broke out there on Franklin Templeton. And I thought it was interesting because we know this, and it was this statement right here. Roger Basin, Franklin Templeton's head of digital assets, described the XRP ledger as a payments-first blockchain, emphasizing its ability to handle real-time, low-cost cross-border, focus aligns with Ripple's long-standing position. XRP allows the network optimized for settlement. So we already all know all this, but the fact that Franklin Templeton came out and said, this is the future, and they may be in a position where they could be leading Wall Street into this era. What do you think?
No, absolutely. I completely agree. And it's one of those things that's back to something we mentioned earlier in terms of just the overall narrative and understanding and the validation of a lot of these things we've talked about. I remember when I first used to talk about stuff like this, it was they're never going to do that. They're going to co-create their own system. It doesn't make sense for them to do this. They'll go use some other technology. And now you have these financial institutions coming out and outright saying at this point that this is the path they are very interested in going down. There's real promise here. These things could rewire the banking sector. And to me, it just kills a huge portion of the negative thesis that was put on crypto for a really long time. It was like, hey, are they ever actually going to show any level of interest in using these things that we think one day they will show an interest in using? So for me, like, I could scream at the top of my lungs, it makes a lot of sense for financial institutions to start using this. But if they don't start using it, right, I can't control that. But if they start actually actively putting out reports talking about how good it is and how important it can be, and we start to see that level of adoption, I mean, that takes out one of the biggest negative theses on crypto in general. For the first time ever, you're starting to see these things materialize in a level of understanding that has never been there before. Before it was just, this is a speculative asset class. We're not doing anything with it. On to the next thing. And that whole thing has seen a dramatic shift across the highest levels of the most powerful financial institutions.
No doubt. With the situation you see on the bifurcation of a lot of these compliance tokens versus shadow coins. A good example is the whitelisted, side of things. If you look at Mica or what's happening in Europe, liquidity-wise, it's RLUSD, USDC. Those are the basic bank-issued tokens that are basically going to be Genius and Mica compliant. That's 90% of institutional volume on the whitelisted side, okay? Then you get into that gray liquidity side, which is, it's popular in some retail, but it's more for the debanked and some of these emerging markets. So I think the fact that we see so much of this flowing into either RLUSD and USDC will be the winners in this era. Granted, Tether still has a lot because of what's happening in the crypto exchanges, especially in these DEXs. I've never seen so many DEXs, Mickle, that are doing ridiculous volumes right now. I'm just blown away by this. It's crazy.
It's incredible. And it's one of the things that I've tried to, for the non-crypto person, right? For the non-crypto person and the people who are very into TradFi, one of the things I just show them is the volume number. And I'm like, look,
all you got to do.
No matter what you think about it, right? Whether you like it or not, you think this is a very large, and it's like, they can't deny it, right? And it's like, you need to understand that whether or not you understand it or not, the market appetite for these things is obviously extremely large, because no one is just throwing around capital like that just for fun and saying, oh, well, I'll just do this just to do it. There's obviously a huge amount of traction that can absolutely not be ignored. Look at the stablecoin volumes. Look at how much money is coming into these DEXs. There is a real reason people are showing up to do these activities on chain. And rather than just coming in with general skepticism of, oh, I don't like crypto, see if you can figure out why that's happening. Like, why are these people showing up to these places to do things? Because if there was all these other ways these things could be done, or if there's other better ways to do it, then why would these people be showing up to this new technology, and why are the numbers growing so exponentially? If you can get to the bottom of that, you'll answer your question of why crypto is important, but you can't turn a blind eye to these numbers. Look, if we were on this channel and stablecoin adoption was in the millions and these DEXs had a couple $1,000 traded, we would get on here and we'd be like, all right, maybe they have a point. Like, this stuff's not being used. I think it's really hard to go against those numbers and come away with the idea that this is all not significant and you shouldn't be paying attention to it.
Well, this was a topic that came up in our last seminar that we did. And my statement I did a whole slide on this of saying long the rails, short the banks. And what I meant by that is go into an overweight position on infrastructure, because you look at blockchains like XRP, I would throw Solana and even ETH in there that host a lot of these stable coins. And then I'd put underweight positions against regional banks, which are mostly reliant upon deposits. Okay. And all of this is flowing in. So you got to watch the friction right now between what's going to be going on that. What do you think about regional banks? Maybe a regional bank could flip the script here. How could they do it?
Regional banks are in such a bad position regardless, because it's such a mess with the financial regulation coming in and the backstopping that the large banks have seen, because it put a huge disadvantage to being a regional bank. It's like, how could you convince someone to hold money at a regional bank when if you go to a large bank, you have an unlimited bailout clause, and if you're at a regional bank, you're essentially just screwed. The whole banking sector because of like whether you argue regulation is good or bad, it has not been evenly applied to the banking sector in general. You have these large banks with the Fed master accounts that have this access that the regional banks don't have. And it's this huge problem. And I think you make a great point. If these regional banks need to do something to stay competitive because they're not getting that same level of guarantee and backstop than the large banks are getting, is there a way they can incorporate crypto and pivot? I think yes, but it goes back to my biggest problem. And this is one of the biggest things I learned investing in Tesla was, look, you can have these legacy automakers like really take electric vehicles seriously. But the problem is the smartest and brightest engineers out of college and all the best talent, they don't want to work for Ford. They want to work for Tesla. And you're going to see the same thing in the crypto sector. Like you're not going to get that super intelligent person coming out and the regional bank is not going to recruit him. He's going to want to go work at Ripple. He's going to want to work at Coinbase. He's going to want to work at Circle. And that's the historic problem here. They don't want to go work for these other places. They can't get the talent. And you're kind of left in this thing where you're never going to go compete with some of these large players in the crypto space. And that's the side of it I don't think a lot of people really take enough time to understand. I think they think that, hey, it's just crypto. These people are doing cool things all the time. These are big banks. They can pay their way. They can have the best product in the world. But take a look at even what Bank of America was trying to do to compete with something like Venmo. Like they couldn't even come close. The UI is terrible. Everyone hates using it. No one's doing it. Even someone like Apple Pay couldn't necessarily even stick up to what Venmo and Cash App were doing. And if you don't have the right teams to build out these products, it's a lot harder to do than I think people give it sufficient credit for. So it's not just that BlackRock can step into the ring and say, hey, we're going to throw $1 trillion at crypto this year. It has to be going to the people who can actually make a difference and understand the asset class. And that's a long cycle to go find those people, bring them in and get them to the place they need to be. So I think it's harder to do than people give it credit for.
Well, and you even look at BlackRock, I mean, their position with BUIDL, which is really their core position around, what we're going to see around tokenized assets. 40% of their stablecoin reserves right now are held in tokenized treasury funds like their own BUIDL fund. So that's to your point, is they're using, companies like Securitize, which is BUIDL, and Carlos and his team, which are crypto native, to build out in these ecosystems, and you're seeing more of those kinds of partnerships. So to your point, I think
they're using people like Anchorage for custody of the digital assets they have. It's like that was like the first sign. That's when I think I really started to understand it, because I was like, they already have HSMs, they already have all this like network to protect their own servers. Like if anything would have been like really simple for them to do, it would have been to like spin up some high quality custody. They can't even do that. Like what they're not going to be able to create anything in some well, but the vast majority of them will not be able to create anything that keeps pace with what we're already seeing on the cryptocurrency side. And you already see most of them rolling over. They're using these crypto companies for custody. They're moving to them for stablecoins. They're moving to them for these other things because that's not their expertise. Their expertise is creating structured products and essentially deploying capital. Like that's what they do in a large degree. And then they make very easy interfaces for people to come in and hold their money. And
then you've got the whole speed to market to your point right there.
Yeah.
Speed to market right now is at, absolute blistering pace. And it's only going to accelerate. Can you imagine what speed to market will be after we get clarity? It's unbelievable.
And they won't have time they won't have time to.
It's just like Genius.
They
were chasing their tails on Genius Act.
And that's why they wanted to push it off for so long. I think they did a really bad job of actually accepting how quickly it was going to come. I think they hoped they could have pushed it off 4 to 5 more years, slowly built. But all of these things, like how often have you heard Charles Schwab coming out with their crypto native desk or Goldman Sachs and nothing's there. They don't even have trading. They have some ETFs. They haven't done anything material to even give me any indication that they're ready to step in and compete.
Huge. I think this is the pivotal moment. It's, if you go back and look at the eras before, we've seen this 3 times. And the 3 times that it occurred was on the birth of the internet, the birth of social, and the true birth of mobile. Those were when we saw not the incumbents taking it to the next level, but the new companies, the new innovators, the new developers pretty much reformatting the entire industry.
And it's hard to wrap your head around at times. It's like, how could Blockbuster not compete and take out Netflix? How could you be in a position where
how could BlackBerry not compete with Apple, who never made a phone?
Exactly. And they just can't, they never do it correctly. And it comes down to the things we've just talked about, but I don't think it's going to be a different story for crypto.
Well, listen, the one thing you got to look at is this right here. I'm going to show you this chart, and I think this is self-defining right here. Institutions are now reducing dollar exposure. So U.S. dollar index now falling 9% in 2025, making its worst performance since 2017. Okay. That tells you guys what we're going to see in terms of not only the potential for where stablecoins are going to be. But I think really the biggest question is how we look at debasement trade becoming the big factor here, which will be digital assets and other assets out there. If you guys are not, I know those of you who are brand new to this show, you're already in digital assets and probably in some precious metals. But I think most people are trying to figure out how to deal with this kind of debasement that we're dealing right now, which 9% 2025, probably going to see that in 2026. What do you make of this in terms of the U.S. dollar share of global foreign currency reserves?
You know, it's one of those things that I just don't see that trend changing too much in any near future. I mean, it goes back to what we talked about earlier. Like, how can you be confident in the dollar when the things we're seeing on the fraud side are just so through the roof? It's like, that's where that change needs to happen. And until there's any level of confidence, that's not going to change. And you know, it's one of those things where the answers are a lot easier, in my opinion, than they're really given credit for in the market. Like, there's very simple things that could be done to fix this, but it doesn't seem like there's any desire to actually go and fix it. It seems like there's a lot of desire to make the United States think that things are being done to fix it, but there's not really any initiative to do it. And I sincerely hope I'm wrong. I sincerely hope that large efforts are put in place to clean up a lot of the stuff we talked about earlier in the show, but color me extremely skeptical on that side. It just, and I'm sure you know, I'm sure you've seen far more than me, but there hasn't been a lot of times in history I found where things are actually done to prevent these sort of things from happening moving forward, which normally involves holding the proper people accountable.
That's the problem you're dealing with right now. And if you look at this Trojan horse that could really be happening around de-dollarization, back to your point, that's just some of it. But I mean, there are so much going on globally. And if we start to see the potential, Tether may end up being a big winner here. It's going to be interesting of how this could play, because you look at what's happening in Brazil, Russia, China, a lot of these, whether it's the digital yuan, the real, the ruble, most of which are now trying to bypass SWIFT, which is going to be interesting because XRP and what we will see on Ripple could play a big role in that in the future. So plus you kind of consider the vampire attack on when we talked about, you know, these emerging markets, these weak fiat currencies. Yep. I just don't know. This is going to be, I feel like it's going to be, think of it as like almost like a dam, and the central bank trying to build a wall to keep dollars and local currency held in there, and crypto and stablecoins are just basically drilling millions of tiny holes in that dam, and eventually, pow.
I see it the same way, and I just think my thesis throughout the entire thing is there's so much focus you can put on each individual thing and how it impacts all these different aspects, but I think it's always just so easy to default. Like, it didn't matter all the different cases you made for the internet, why it would be successful, why it wouldn't be successful, the problems, the lack of problems. The truth is the technology that was being delivered by the internet was far too powerful for it to be ignored. And it was going to gain mass adoption, and it was going to become a systemically important thing in human society. And I attribute the same thing to crypto. There's going to be huge road bumps. There's going to be huge black swans. There's going to be these huge things that go wrong along the way. But I just don't see, I think the technology is far too powerful to ever be long-term negatively impacted by these things taking place.
Are you, okay, last question here, Mickle. Are you at all concerned about this idea of kind of the new marginal buyers of U.S. debt? Because you look at the buyers of U.S. debt in the past, it's been China, Japan, you know, and now you've got stablecoin issuers who essentially are becoming that because they're matching, you know, for every 1,000 of RLUSD, you know, issued by Ripple and purchased by whoever, you know, you're buying UST bills to back the token. So are we ever in a position where these stablecoin companies just become too big to fail? And because they're tied so much to the treasuries of the United States government, how do you think that becomes? Because we've already kind of been in that situation with Japan and China of owning too much of our treasuries.
Yeah, I mean, I think that's an incredible point. And to be completely honest with you, it hasn't been something that I've thought as much about. Just sitting here thinking, I'm almost wondering, is it better? You do have systemically important people in that stablecoin world. Mm-hmm. Do I trust a public company at this point? Maybe right now, in certain governments, maybe it's better that way. Maybe it's better that governments who are just going to hide and manipulate and cheat their way through things. At least when you have a public company, it seems to be, I mean, it seems like every single one of them in the United States is run with less fraud than the United States itself at this point. Like that seems like an okay statement to make right now. So I don't know, maybe it's better, maybe it's worse. I do think you do get to a problem on the systemically important stuff. And like same thing we were talking about with the Fed and the regional banks, like certain ones getting this stamp of approval that other ones don't get. And then you have a flight to quality and certain things that have these guarantees that others don't. That's definitely going to be a pain point and something that needs to be figured out.
Yeah. Listen, we're going to cover this and more. 2026 is going to be a huge year, Mickle. So we're going to have you back as a regular, as always. We'll be covering topics like this and a lot more. So you guys stick around. If you're not following Mickle over on YouTube, make sure and do that. We'll drop a link to his YouTube channel over there where you can visit him. And it was good having you on, man. Happy New Year.
Thank you so much. Happy New Year. It's always a blast. Love coming on the show. And it's always great to be able to jump into these things with people who really understand it at a high level. And I learned so much just from coming on the show, talking with you. So I hope the viewers feel the same way.
Hopefully. All right, guys, make sure to like and subscribe. And of course, if you not do one thing, you know, when you set your resolutions that hopefully you've already done, but add one more to it. And that is go out there and teach somebody about digital assets. Just help somebody else come into this ecosystem. I think it'll make you feel better. And you don't have to tell them what to buy or anything. Just educate them a little bit on what's going on in this space. I think that'll make the world a better place, hopefully, because we got enough problems out there. This is good. Anyway, Connor, we'll see you later, and we'll catch you next time right here on the XRP Pod.